In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Snap loses its chief strategy officer. Imran Khan says the best is yet to come for the social media company, but it is time for him to start a new story. Plus, Tim Cook warns that President Trump's proposed tariffs on China will push up the price of some of Apple's most popular products. The president tweets back. Details ahead. And it is the start of a new era at Alibaba. Jack Ma announces his succession plan as he turns his focus to philanthropy and education. But first, to our top story, Snap is losing its chief strategy officer. 41-year-old Imran Khan is leaving the company to pursue other opportunities. Sources tell Bloomberg he's set to start his own tech investment company. In a memo to staff, he said, "I'm really proud of what we've achieved as a team. In less than 4 years, we grew our revenue from nearly zero to over $1 billion on an annualized run rate. Along the road, we also hired more than 3,000 people and expanded our operations to over 13 countries around the world." Bloomberg Tech's Alex Barinka has been following the story, joins us now from New York. So, Alex, Imran Khan has very much been the adult supervision at Snap, and he's lasted longer than other executives, but he's also the latest in a long line of executives that have exited. What does this mean?
So that's exactly right. He is the latest and also the highest up on the food chain. He was basically known as CEO Evan Spiegel's number 2. Evan focused on product. Imran was the business mind here. So right now, if I'm an investor, I'm thinking about what this means for Snap's business going forward. The past year has been a really tumultuous one for this company. They've been trying to figure out its business model. They've redesigned the app and then brought back that redesign. And if you remember, in August, they most recently showed a decline in daily active users, their very first decline in that very important metric. So what I think this means for Snap is you need somebody there who can kind of take the reins of a business mind over at Snap amongst this turnover in the top ranks of the social media company.
So, what's the plan to replace him? Who could be in the running?
So they did bring in somebody to report to him from Time Warner. She's overseeing she's head of business development. She's overseeing sales, basically explaining the company's vision for advertisers to those potential clients. But I think this might actually open up a little bit of an opportunity to bring somebody in who can kind of have a blank slate to do that. Evan Spiegel told my colleague Sarah Fryer last month in a story in Business Week that basically he's looking to revamp his management style, change his management style from a Evan first to a more of a democracy, perhaps. So this would give the opportunity for Snap to bring somebody in who can kind of break down the walls of secrecy that have been so rampant among the company, and also kind of bring in a business mind who can take up where Imran left off.
Well, we can assume that that's probably easier said than done. This, of course, as Snap is battling Facebook and Instagram, and as it's getting, even dragged into these social media issues around content that's left up online. We saw Snap stock go down last week on the back of these hearings, even though Snap wasn't even involved. So talk about the challenges and headwinds ahead for this company.
That's right, and you can see the messaging change. Snap is trying really hard to distance itself from the likes of Facebook, from the likes of Twitter. Say, look, by the heart of our app, the fact that your pictures do disappear, they're not up there forever, you're not necessarily being bombarded with content from a bunch of different people, it's only who you choose. That is kind of the line that they have been walking, but as you said, investors have kind of missed that differentiation. I think it'll be really important for them going forward to continue kind of asserting that line, but also getting investors more comfortable with the business model. Last earnings was the first time that they gave revenue guidance for the first time since even before they went public back in March 2017. So now that they're putting some signposts out there and giving some additional financial expectations, I think that is a good sign for investors who've basically been asked since the beginning to just trust management that they'll figure all of this out. So in terms of boosting revenue, continuing to get users to be back on the platform, not seeing any more daily active user growth, and bringing in, again, folks who can sit at the top of this management team and help Evan Spiegel on the business side. Those are the three things that I think investors will be paying most attention to going forward.
All right, Imran Khan out as Snap's number 2, very influential at the company over the last several years. Alex Barinka for us in New York. Alex, thanks so much for weighing in. Now, to another top story, Apple's trade troubles. President Trump says he's ready to impose tariffs on an additional $267 billion worth of China imports. That has companies like Apple worried. Last week, the tech giant wrote to the U.S. trade representative saying, our concern with these tariffs is that the United States will be hardest hit, and that will result in lower U.S. growth and competitiveness and higher prices for U.S. consumers. President Trump responded over the weekend, tweeting, Apple prices may increase because of the massive tariffs we may be imposing on China. But there's an easy solution where there would be zero tax and indeed a tax incentive. Make your products in the United States instead of China. Start building new plants now. Exciting. Hashtag Make America Great Again. This all comes as Apple is set to unveil its latest iPhones Wednesday. For more, we are joined by Mark Gurman of Bloomberg Tech, who covers all things Apple. So, Mark, we can imagine this is not something Apple wants to deal with 2 days before its biggest announcement of the year. How do you think this will impact what we'll see on Wednesday?
I don't think it will, right? I don't think this is something they're going to mention. I don't think this is something that's going to be talked about next week by them. I'm sure the press will be talking about it, and people watching the event will be curious about it, but I don't think they're going to come out and say, hey, the Apple Watch is a little bit more expensive this year because of this, this, and that. I think these tariffs are still sort of in the early stages. These are proposed. We see hundreds of companies commenting on the tariff, so maybe there'll be some wiggle room for that to change. I saw an analyst note this morning indicating that the overall revenue prospects for this tariff's impact would be about 1% to 2% across 2019, so not a very significant headwind for the company.
Here's a little bit more of what Apple told the U.S. trade representative in this letter, saying it is difficult to see how tariffs that hurt U.S. companies and U.S. consumers will advance the government's objectives with respect to China's tech policies. We hope instead that you will reconsider these measures and work to find other more effective solutions that leave the U.S. economy and U.S. consumers stronger and healthier than ever before. Now, if Apple prices were to increase as a result of these tariffs, Mark, where could we expect to see those price increases? On what products?
So 3 main categories. One is the AirPods, which is unfortunate because that's a growing popular product for them. This is one product that is not as high margin as their other devices because it is a new category for them and they are much harder to produce. Another fast-growing category, the Apple Watch, and they're saying the Apple Watch in particular would be hit hard by this and price increases could be possible on that device. The third thing is basically some array of accessories, right? The Apple Pencil stylus that a lot of people use to draw or write on the iPad. There's also some versions of the Mac Mini, also some of those dongles and chargers that everyone carries with them now, and the leather cases that Apple sells for the Apple Pencil, the MacBook, the iPhone, and the iPad. So nothing extraordinary. It's not the iPhone, it's not the iPad itself, it's Mac laptops, but it's some of their fastest growing products.
Well, of course, this situation with the trade dispute, trade tariffs is evolving, so we'll continue to follow that. Now, you've broken a lot of the news that we're expecting to come out of the conference on Wednesday. What else are you looking for? Could there be any surprises in addition to the 3 iPhones you believe will be unveiled?
Yeah, I don't think there will be any surprises. I think the main 3 things that we're going to see are, one, the 3 new iPhones, the iPhone XS, an upgrade to the iPhone X, the iPhone XS Max, a bigger iPhone X, and the iPhone XR, a cheaper iPhone X. And you sort of can see the theme here. The next thing would be the biggest upgrade to the Apple Watch since it was announced in 2014. And the third thing would be an update on Apple's wireless strategy. So what I'm expecting are a new version of the AirPods, not a big revamp to the product, but a minor upgrade, as well as an update on the AirPower wireless charger. So I think those 3 things combined will make for a pretty good event for investors and consumers alike.
How do you imagine what's going on between Apple and Washington, between China and Washington, is impacting the supply chain? Because as we know, in the weeks after this announcement, it is all about getting as many phones as possible to the stores on time and to consumers on time who've ordered them online. And there's always this question of whether there will be more demand than supply, as there often is at the very beginning.
Yeah, I mean, that's a really good point. Speaking of supply and demand, what we're hearing is this iPhone XR device might ship a little bit after the new iPhone XS models because of some supply chain problems related to producing the screens. And on the topic of the Trump administration and the tariffs, if you look at the stock market right now, some of Apple's suppliers overseas are being hit by this because they want to know what their long-term impact is going to be. Is Apple really going to shift production to the U.S.? And if they shift more production to the U.S., some of those foreign suppliers are in for some big trouble because they rely on Apple for so much of their business, and they had for so many years, and they expect to for so many years going forward.
Now, from a design perspective, the iPhone X has already taken us a step towards the elimination of the home button, but of course we still have these older models that are being bought and made. Will this new generation, the iPhone XS, will this lead to the ultimate complete elimination of the home button, and how long will that take?
So that's a good question, and it's a multi-year strategy. So they started with one model last year. Now you're going to have 3 models. All of the new iPhones are going to be home button-less, Touch ID-less, all Face ID, all edge-side screens, no physical controls in terms of the home button, right? But they're still likely going to sell some of the older phone models, like the iPhone SE. Perhaps they'll still sell the iPhone 8 and 8 Plus, the iPhone 7, maybe some of the iPhone 6 models. So what we're not going to see is Apple stop selling devices with home buttons. I think that's going to take at least 1 to 3 more years before we get to that point. But they're going to have to release more iPhone models. They're going to have to do an even cheaper iPhone with that new design. Remember, the iPhone 5 or the iPhone SE, I should say, costs between $300 and $400 depending on capacity and what country you're buying it in. This cheapest iPhone, the new one that's going to be released on Wednesday, at the very least will be $700. So we're talking about an entire market of sub $500 phones that is not being addressed by this new design, and they'll eventually have to get there if they want to remove the home button from all of their products.
All right, Bloomberg Tech's Mark Gurman. I know you'll be all over the news Wednesday and throughout the week, as will we. We will be live from Cupertino on Wednesday as Apple holds its latest event in the Steve Jobs Theater. Join our special coverage on Bloomberg Technology, 1 p.m. Eastern, 10 a.m. Pacific, as we bring you the announcement as they happen. Then again at 5 p.m., we will have analysis and insights from our entire Bloomberg Tech team and experts on the ground on Apple's latest products. Coming up, we will stay on the tension surrounding China and the United States and zero in on the race for 5G. FCC Commissioner Brendan Carr joins us next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. The race is on to be the first in the rollout of the 5G spectrum. Just last week, we learned China is said to be considering a mega merger between 2 of its largest telecom companies, which could speed up its development of 5G. And now in the U.S., AT&T just announced it would launch its mobile 5G service in 5 more cities this year. For more on the 5G battle, joining us now from Washington, Brendan Carr, FCC Commissioner. And Commissioner Carr, you just unveiled a new 5G deployment plan. Walk us through the parts of this plan that you believe will be the most game-changing in terms of speeding up this rollout.
Thanks. As you pointed out, there is a global race to be first across the finish line in 5G. And from my perspective, the finish line is not the point at which we see the first deployments in places like New York and San Francisco. We need to make sure that every community in the U.S. has a fair shot at seeing 5G. That's what the new proposal that I unveiled last week is all about at the FCC. We'll be voting to streamline the regulations governing infrastructure 5G deployment to make it easier to get it to every single community in the country.
There's a possibility, we hear, that the second and third largest wireless carriers in China could merge and that the government would very much be part of this. There's big concern that that will give China an advantage. What's your reaction to that?
Well, the U.S. and China certainly take very different approaches from a government perspective when it comes to 5G. In the U.S., we led the world in 4G for a specific reason. We updated our regulatory structures at the government level and freed the playing field for the private sector to invest. That's the model we relied on in the U.S. for 4G. It's different than our counterparts in Europe and in China for sure, we step back at the government level and try to let the private sector drive the standard setting and the investment. But the approach we're taking is setting us up to help win this race to 5G.
Right, but do you have any concerns that these latest moves in China will put the United States at a disadvantage, regardless of the fact that it's a different approach?
I don't, and here's why. The race to 5G is going to be won from two perspectives. One, we got to free up more spectrum than ever before so these new devices can operate. And the U.S. right now is ahead of China when it comes to freeing up spectrum, so we're in good position there. The second piece of it is, as your listeners know, small cells are the building blocks for 5G. 3G and 4G deployments were marked by these 200-foot towers. Well, 5G is going to be about layering on top of that small cells about the size of a backpack. And right now, the FCC is voting to make it a lot easier to deploy those small cell devices. And that's going to be the key to winning this race to 5G.
What about the progress being made in other countries, though? Japan, South Korea. Is there any risk that those countries, some would argue South Korea is already ahead of the United States. Do you see any risk there?
There's a lot of countries in Asia, for instance, that already have, on a per population basis, more small cells deployed, more wireless infrastructure than we do here in the U.S. And that's why it's a challenge for regulators, whether at the federal level or the state or the local level, to make it easier for this infrastructure to get out there. But I'm not too concerned about where we stand in the race to 5G. I think we're in good shape. I think we're moving ahead with updating our regulatory structures. And I'm confident that if we stay on this path, both from a government perspective and from where the private sector is with their tremendous investment and innovation in this space, consumers in the U.S. are going to benefit from this new deployment.
When will we see, though, mainstream deployment? When will a consumer like you or I be able to make a 5G phone call from our mobile phone?
Yeah. So we're already seeing some leading edge deployments. I was in Indianapolis last week, and that's one of the first cities where two nationwide providers have announced that they'll be deploying 5G capable devices by the end of this year. 2020 is more broadly speaking, a year that a lot of people are looking at in terms of a more wide-scale deployment of 5G technology, and then continuing deployment for the couple years after that.
All right, Brenton Carr, FCC Commissioner. Commissioner Carr, always good to have your thoughts here on the show. Thanks so much.
Thanks very much.
Still ahead, Elon Musk scores a much-needed win with his successful SpaceX launch, but the questions surrounding his leadership remain. We'll discuss what is ahead in just a moment. And Tech is live streaming on Twitter. You can check us out at Technology, and be sure to follow our Global Breaking News Network TikTok on Twitter. This is Bloomberg. Some good news for Elon Musk. SpaceX managed to successfully launch a commercial satellite Monday morning, marking the rocket company's 16th mission of 2018. The Falcon 9 lifted off from Florida's Cape Canaveral Air Force Station despite poor weather, delivering a Canadian communications satellite into orbit. The company is targeting 30 missions this year. Sticking with Musk, it has been a tumultuous few months for the Tesla CEO. Shares tumbled last week as Musk yet again embroiled himself in controversy, first attacking the British diver involved in the Thailand cave rescue, then smoking marijuana on a podcast with the comedian Joe Rogan. The week was topped off by a blog post announcing multiple employee promotions, including Jerome Guillen to automotive president, following the departures of two top executives. Now, as rumors swirl about a potential Air Force investigation into SpaceX, there's no telling what the CEO will do next. Here to discuss further, Tesla analyst and Oppenheimer managing director Colin Rush, who has an outperform on Tesla. So, Colin, lots going on. How have the events of the last few weeks changed your view on this company?
Well, the risk around Elon and the SEC investigation, which is being reported in the news around the Go Private tweet, is a real concern for us, and we've certainly highlighted that in our research. But we're still looking at very positive fundamentals for this company, especially as Mr. Guillen takes charge of the automotive activities here for Tesla. You know, he's a proven leader. Our checks on him have come back that he's a very stellar leader. He's no BS, and will likely get the job done. But what we're seeing is solid sell-through of the Model 3, which helps the prospect of hitting their gross margin target of 15% for the third quarter. And we think that's the real story here for the Tesla stock. If they're able to hit that number, they should be able to hit their cash flow number, and that will support the stock. And more importantly, will help start supporting the bonds, which have been under a great deal of pressure in the last few weeks.
How much do Musk's extracurricular activities impact your view on the company?
So, he's been a concern for us for a long time in terms of, his distraction with multiple projects. He's proven himself to be a clear visionary in terms of what is possible in particular industries, and certainly a micromanager on certain levels, but it's certainly become a concern that his time would be stretched and that they may need to augment their leadership. We were encouraged to see the announcement this morning, and like I said before, Mr. Gein's reputation is very, very solid from our checks.
Now, even though he said Tesla at this point remains a public company, do you think that the uncertainty that he has introduced into this process will impact the relationship with the company and with suppliers and ultimately impact production?
I think it's ultimately probably time for him to adjust his role. The company's maturing, it's reaching a different stage of development, and can have a new level of leadership inside. If we look back at what happened with Apple after Steve Jobs left, at the end, the stock ended up appreciating pretty significantly over the following 3 years. That's something that we would look at, and I think investors are looking for a bit more formality and a more of a traditional management team on this company as it moves forward with executing on its vision.
And how much does what happens with SpaceX, whether it's a successful launch or another investigation, how much does that impact your view on Tesla, or not at all?
It really doesn't. What we're looking at is whether the company's making the cars, whether they're making them economically, and the demand fundamentals. We think the next real benchmark for the Model 3 is going to be whether they can actually sell 500,000 cars a year. We think there's a big debate amongst investors between whether they can push 250,000 cars, which I think there's a consensus they can do, and whether they can reach 500,000 vehicles sold per year on that Model 3. And that's the thing that we'll be looking for over the next 9 to 12 months.
Oppenheimer's Colin Rush, always great to have you here on the show. Thanks so much for joining.
Thank you.
Coming up, Alibaba's new era. Jack Ma begins the process of handing over the reins of the company he founded 19 years ago. We will look at how investors see the succession plan playing out. Plus, manager turned Spotify exec Troy Carter is known for smoothing contentious industry relations with artists, and now he's leaving Spotify. We'll sit down with him for an extended conversation next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. It is the end of an era at Alibaba, with founder and executive chair Jack Ma announcing his plans to step away from day-to-day running of the company. Bloomberg Tech's Lulu Chen has the details from Hong Kong.
Billionaire Jack Ma is stepping down as Alibaba's chairman a year from now. He's handing over the baton to current CEO Daniel Zhang, who will take on a $420 billion empire. Jack Ma will work with Zhang to smooth transitions. Ma wants to ensure the company can run based on institutional structure instead of being reliant on individuals. Daniel Zhang joined Alibaba in 2007. Formerly an accountant at PwC, the professional manager was a key architect for Tmall and Singles Day, China's largest shopping bonanza. Zhang is championing Alibaba's foray into new retail, shaking up a $4 trillion brick-and-mortar business. Ma will remain on the board until 2020 and stay as a lifetime partner at the company. I'm Lulu Chen, Bloomberg News, Hong Kong.
To dig deeper into the changes at Alibaba, we're joined now by Bloomberg Tech's Selena Wang and Kevin Carter, founder of EMQQ, the Emerging Markets Internet ETF. Now, Jack Ma hasn't been involved in day-to-day operations for some time, but he still certainly looms large at the company. We went to China a few years ago, and we interviewed him on Singles Day. So, Kevin, what do you make of him exiting the company now, and what it really means for Alibaba?
Well, first of all, I don't think he's exiting the company. He's definitely exiting one particular role. He's doing it in a methodical way that's been talked about and broadcast. So it's new information, but it's not really news. I mean, he stepped down from the CEO role several years ago, and now he's making it more formal. The timeline for his handing over the chairmanship, but he handed over the CEO role many years ago, and I think it's more about changing his image to the philanthropist role that he's planning on taking on in the future, as well as being a teacher.
Selena, is there anything surprising about the way the plan has been laid out here?
You know, this has been a long time coming. He's been talking about this for many years. He's always saying he wants to pass the baton to the younger generation. He wants to die on the beach, not in his office. And it's not a surprise that Daniel Zhang is the one who's going to be stepping up. He's much more low profile, low mannered, much quieter than Jack Ma, but he has been the CEO for nearly 3 years. He's executed extremely well. He's credited with really bringing Tmall to the forefront of the company, for spearheading Singles Day, for executing on this new retail strategy. So it doesn't really come as a surprise. I think the most surprising part is probably the timing of the announcement, even though investors and analysts have known for quite some time it was looming large.
Is it any surprise that it's Daniel Zhang taking that role and not Joe Tsai, the vice chair?
He is the executor, after all. He's not as high profile, but he was hired in 2007. He came on as a CFO at Taobao. He's really credited with making it a very established organization. Jack Ma has said that him leaving means that this company is no longer reliant on specific individuals or cults of personality, but it can rely on really the organizational structure. Jack Ma probably won't ever leave his role as being the public face of the company, but behind the scenes there have been many players that have been propping the company up for quite some time.
Take a listen to this interview. We actually sat down with Jack Ma just a few days before he made this announcement in an exclusive interview on Bloomberg television. Take a listen to what he had to say about the company's future.
I don't think any problem with Alibaba will happen. I mean, our people, I fully confidence in my team and fully confidence in our structure, like the partner structure, which a lot of investors don't like. Hong Kong don't like, New York don't like. Oh, it's so perfect. It's the system which I think this is the contribution that I and my team built to this world. And people in the future will love it. Can make the company last long.
Hopefully we'll continue to get interviews with him because the fire is always fun to watch. But Kevin, what is your view on the future of the company without him as involved?
Well, I think that was beautiful, by the way. He's already been gone. I mean, the fact is he's made it very clear that what's important to him is culture, handing the baton, empowering other people, and as you sort of alluded to, I think Daniel's considered more like, I saw a story earlier that called him Clark Kent versus Jack Ma being Superman. So I think the company's in great hands. And more importantly, the fundamental story here. You've got billions of consumers in China, in India, in Africa, all over the world that are getting their first computer, their first internet access, 5G coming soon, and a big deal.
Soon-ish.
Soon-ish. Well, yeah, yes, I don't have a projection exactly when someone in the U.S. will have access to this, but it sounds like it's soon enough to matter. But the point is, the fundamental story behind Alibaba, I mean, if you look at the revenue growth they had last quarter of 61%, this is a big story of all of the consumers in China and the rest of the world moving on up, wanting stuff, getting a computer, getting the internet, and doing it all on the phone. And so he set a great culture for the company. They've got a great direction, and I think they'll continue fundamentally to do quite well. The stock market will do what it's going to do.
What do you think are the biggest challenges that lie ahead for Alibaba, especially in the middle of a U.S.-China trade war?
Well, I think the stock's risk and problems have been related to the trade war. I think that if you look at the different parts of the emerging market and China economy and the stock market, the companies that are going to struggle with the trade war are going to be steel and chicken feed and tires and things like that. Of all the sectors that are going to be hurt by trade wars, this emerging market internet sector will be hurt the least, but it will certainly affect the stocks.
Selena, talk to us a little bit about what Jack Ma is planning to do. He's talked about philanthropy, he's talked about education.
Absolutely. He's talked about looking at Bill Gates as a potential model. He definitely has spoken a lot about education because he used to be an English teacher and that was sort of his first love. But he also has greater ambitions to use technology to transform the environment, to make healthcare more efficient. So he has broad and expansive philanthropic ambitions. But I think he'll also continue to play the strategic role for Alibaba in terms of the high level at the company. He's going to continue to be on the board of directors as well as part of this influential Alibaba partnership. And Daniel Zhang is going to have pretty unparalleled power as the CEO and the executive chairman, a position that hasn't been consolidated since 2013. And they do have a number of challenges to go up against in terms of overseas expansion, the transformation of their business lines to rely more on new units like entertainment and cloud computing. So I think Jack Ma will dedicate a significant time to philanthropy, but I think he will always be a presence at Alibaba.
How do you see, Kevin, Alibaba continuing to compete with their own homegrown opponents, whether it's Tencent or Baidu? This, as the Chinese government is cracking down and shaping new regulation on gaming, and you never know where the Chinese government is going to come and try to impact your business next.
Sure. Well, I think the gaming situation has impacted Tencent more from a fundamental standpoint, but. You know, the government's always going to be part of the China story. You know, they're coming from a different place than we came from in terms of their management of their country. So I think that those are risks involved. In terms of competition, JD.com, which has been in the news for other corporate governance reasons, or related corporate governance related reasons this week, you know, they're a player and a meaningful player, but. Alibaba continues to have the dominant market share. You have Pinduoduo, which is now publicly traded, which is more of an app-based version of e-commerce that's taken the third market share. So, but the other thing is, as you mentioned, they're in a lot of businesses. I mean, Alipay in and of itself is enormous business. And so they're in payments, they're in movies, they're in all sorts of things. The law of large numbers dictates that it's going to slow, but it's still going to grow at a really fast rate for a long time in lots of different directions.
Right. EMQQ founder Kevin Carter, thank you so much, as well as Bloomberg Tech's Selena Wang. We will, of course, be covering the next generation of Alibaba. Meantime, Tencent's WeDoctor is looking to expand beyond China with plans to expand services across Asia in the midterm. That could include Hong Kong, Southeast Asia, and the Greater Bay Area. The company is likely to seek a local partner for any Southeast Asian expansion and also looking to leverage its data within a partnership with the insurer AIA. But an IPO remains elusive. Chief Strategy Officer Jeff Chen told Bloomberg's Haslinda Amin that there is no fixed time frame for a listing.
I don't think there is an exact timing that we're looking into. We have said yet. For us, IPO is just a milestone. It's not about how the market is now or we're trying to time the market. I think we'll IPO when we're ready because that will help us to go into other international markets.
Up next, he is the man who was instrumental in repairing Spotify's relationship with artists. Now Troy Carter is one of the biggest names in music and looking to hit his career's next big note. That is ahead. And Les Moonves ousted at CBS. We'll talk about the ramifications for the latest Me Too movement dismissal in Hollywood and beyond. This is Bloomberg. Troy Carter first made a name for himself as manager to both Lady Gaga and John Legend. Today, he is one of the biggest names in music. As Spotify's global head of creator services, he has been credited with repairing the company's relationship with artists. And through his own company, Adam Factory, he continues to work with star talent as well as investing and incubating technology. And he will double down there in the years ahead. On his last day at Spotify, I sat down with Carter at the Inbound conference in Boston to talk about his exit and the future of Adam Factory and the music business. Take a listen.
You know what? We had a great time. It's been 2.5 years. I'm an entrepreneur by heart, just is in my blood. And I wanted to take on a challenge. And I felt like the music industry was taking a shift. Daniel just lives light years ahead of everybody else when it comes to, seeing what the future looks like. So being able to spend some real time with him and real time and within the company, I think it did a lot for me in terms of understanding how companies scale. Being there to see the company go from, startup to, big privately held company to public company. But also just for me, I was excited about some of the more entrepreneurial opportunities that are, the sort of white space that exists now as well.
And what do you think is going to happen in terms of how the pie will be divvied up, whether it's Spotify or Apple Music or YouTube? Is the pie going to keep getting bigger? Is one of them going to rise to the top and dominate?
I think Daniel's been clear on, it's not going to be a winner-take-all market, and just how the market is shaped. And a lot of it has to do with the different constituencies of consumers. So you have consumers who are never going to pay for music, whether it's they don't believe in paying for music, and more of the point is a lot of consumers can't afford to pay for music, so they're going to consume a certain type of way. And radio has always been an option there, and then you have people who are going to still buy CDs. You got people, who are vinyl enthusiasts. So you have all of these different types of consumers. And then also you have voice, so I think voice is going to develop a certain type of consumer. The car is going to have a certain type of consumer. You're going to have all different types. So I don't think it's winner take all by any means.
So let's talk about Atom Factory and your investments. You've invested in Uber, you've invested in Dropbox. What's hot now?
We're seeing a new wave of companies that are really interesting. So as I'm looking at what does the future look like for investing from a consumer side is much different, so where at one point, when you look at Uber and Lyft and the amount of market share that they were able to grab, and how people weren't able to compete, just as they grew so quickly, they raised a ton of money, they were able to scale really fast. And then you look at the scooter space and how fragmented it's going to be and how regulated it's going to be right away. And also you see a lot of the big players like Uber and Lyft are getting in it like right away. So, and you look at Facebook that they're either buying or building right away. So they're not leaving a lot of room for new ideas to sort of emerge and grow at the scale of some of our previous investments have been able to grow. So I've been looking at opportunities in spaces that other investors haven't looked at and quite honestly may not understand.
Like what?
So when you look at where the world's moving in terms of majority minority, specifically in America, and you look at whether it's Latino entrepreneurs or African American entrepreneurs or female entrepreneurs that are attacking problems that typical VCs would never look at, and your sort of typical entrepreneurs wouldn't go after because they don't understand the cultural pain points. So whether that's lending and sort of the cultural issues around lending, whether it's the bias around lending, whether it's shame around lending, whether it's things that may go on a credit report for this person who may be a good customer, but it may not look typical. So we're looking at different companies that understand those nuances, and we've invested in a couple companies. We're looking at a category that we call the unperfect parent, and an unperfect parent, it's how are new parents looking at raising children versus previous generations, where this is a generation that's on demand, a generation that grew up a lot different from their parents. So we're looking at entrepreneurs in that space as well. And then next week, I'm in Africa for 10 days, meeting with, entrepreneurs in Africa. So, just looking at other opportunities.
Troy Carter there, CEO of Atom Factory. Coming up, a media mogul exits CBS. What is next for the company and the Me Too movement? Les Moonves is out. That's next. This is Bloomberg. Les Moonves, who has loomed larger than life at CBS and the broadcast television industry for 2 decades, has stepped down following extensive and disturbing claims of sexual harassment. CBS said in a statement on Sunday that Moonves was departing without any severance benefits until the conclusion of an independent investigation. The company is adding several new board directors, including high-powered women with M&A backgrounds. CBS has, of course, been involved in a bitter dispute with Viacom Sherry Redstone. National Amusements has agreed not to pursue a merger with CBS for at least 2 years, though another party could push for it. But Redstone now has even more power on the CBS board. Joining us now from LA to discuss, Bloomberg Entertainment reporter Lucas Shaw. So Lucas, it took a dozen or so allegations for this to happen. Walk us through the very latest that we know.
So the latest is that Les Moonves is out at CBS for the first time in more than 2 decades. To your point, there was a story alleging 6 cases of sexual harassment, or 6 women who had said that they had been harassed, that ran in late July in the New Yorker. Les Moonves hung on after that. He appeared on the company's earnings call a few days later. He was supposed to appear at a Goldman Sachs conference just this week, and a lot of people close to him thought it was feasible that he would find a way to stay on top, arguing that he had not abused his position, and also that a lot of these allegations were a long time ago. None of the allegations in either story happened in the last few years. Yet the moment that Ronan Farrow's second story dropped yesterday, it became clear that he was not going to stay in that position. We'd been hearing rumors of a second story and of additional allegations, and then within 12 hours of that second story publishing, Les Moonves announced that he was leaving.
6 additional allegations and very detailed and disturbing allegations at that. There are questions surrounding other CBS executives. Jeff Fager, what do we know about the rest of the uncertainty here?
Yeah, the initial story really portrayed a rotten culture, one that was not respectful of different allegations from women, that had kind of what you think of as the classic old boys club in a company. And most of CBS is run by and led by people who are really loyal to Les Moonves. So I think you have to expect there to be a significant amount of change over the next couple of years. You won't see it right away. The National Amusements, which controls CBS, has put Joe Iannello in charge. Iannello is a close friend and ally of Moonves. I think that's just for the sake of stability. And my guess would be that over the next 6 to 12 months, you see Iannello and several other senior CBS executives leave. Whether they can kind of immediately create a culture of inclusion is not so clear. They would argue they already have it, but other people would contest that.
So talk to us about the new structure here. We're talking about 6 new directors. This Viacom situation is on hold, and yet some are saying, it's now more a done deal than ever.
Yeah, the important thing to note is that while National Amusements, which is the company that controls CBS and Viacom, has said that it will not push for a merger of those 2 companies, that it is possible for the board members of CBS and the board members of Viacom to pursue a deal on their own terms. And what you've seen over the past 24 hours is essentially a clean slate at the CBS board. You have a lot of the people who've been on that board for a long time, a lot of the people closest to Les Moonves, and a lot of the people who tried to dilute Sherry Redstone and National Amusements' control over CBS leaving. leaving, and new people presumably who have been sanctioned by National Amusements, some of whom who actually have ties to Viacom. The CEO of Hasbro has a close relationship with Viacom over movies, and then a lot of the people who are appointed also have experience in transactions and mergers and acquisitions. So you've seen analysts and other investors express belief that you'll see some exploration of a CBS-Viacom merger in the next year or two, and if not a merger of those two, something else, because these are two media companies that are significantly smaller than their peers at this point.
Moonves is one of the most powerful men in Hollywood now to lose his job, perhaps second to Harvey Weinstein. What do you think the ramifications are here in Hollywood and beyond?
I think you'll continue to see more cases come up and more push for change. You know, there were a flurry of allegations and accusations kind of late last year. Harvey Weinstein was the first big case in this kind of the year of Me Too, and then it seemed like every week there was somebody new. The pace has been slower this year, but in some ways the targets have been bigger, and you're seeing more push for kind of institutional change. You know, the Toronto Film Festival is going on right now. There are a couple different things that have happened there. You've seen calls for more diversity in film criticism, and there's also been something of kind of a to-do over this movie in which Olivia Munn, one of the cast members, had noticed that one of her co-stars or somebody who appeared in it had a history of sexual impropriety and had that scene removed from the movie. So I just think you'll see more of this over the next few years.
All right. Our Bloomberg Entertainment reporter Lucas Shaw for us in LA. Thank you, Lucas, for following. That does it for this edition of Bloomberg Technology. Do not forget our special coverage Wednesday live from Cupertino as we watch Apple's latest announcements unfold. Join us 1 p.m. Eastern, 10 a.m. Pacific. This is Bloomberg.